The US Federal Reserve's job is to keep inflation low and employment high by adjusting its main interest rate, and it needs timely data to do that. But the central bank's decision on Wednesday to cut that rate down to between 3.75 and 4% was made without the latest employment figures because the shutdown means they aren't being published.
We get some data in inflation, some data in economic activity, and we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things, but I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this.
And the cloudiness of the employment picture is compounded by a chorus of increasingly urgent warnings about artificial intelligence wiping out jobs as hiring slows down. Even if stocks are hitting record highs, partly because investors see companies like Amazon saving money by eliminating thousands of jobs. Cutting that main interest rate is aimed at boosting employment because it should lower the cost of hiring and investing for employers. But at the risk of driving up prices, already rising to 3% on an annual basis, according to September's inflation figures that were published despite the shutdown. The Fed thinks much of the inflation is being driven specifically by President Trump's tariffs, raising the cost of imports.
The thing about tariff inflation is the base case is that it will come and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation.
Yeas are 52, and the nays are 48.
And even some of Trump's own Republican lawmakers appeared to acknowledge this, joining Democrats on Tuesday in voting to block tariffs on Brazil.
I agree with my colleagues that tariffs should be more targeted to avoid harm to Americans.
And as the US enters the holiday season, the Fed will have to consider how a rate cut that typically encourages consumption with lower credit costs will impact an overall economic picture, for now obscured by the lack of data. Owen Fairclough, CGTN, Washington.